Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures jumping this morning after strong results from tech giants Microsoft and Meta. Meta topping estimates for the second quarter and its outlook for the current quarter. The company planning to spend big on AI, seeing CapEx spend upwards of $72 billion. CEO Mark Zuckerberg says Meta can continue to invest heavily in AI because the company's core advertising business is the real engine. Meanwhile, Microsoft headed toward a $4 trillion market cap today after its Azure division posted a 39% rise in sales during Microsoft's fiscal fourth quarter. That also well above analyst expectations. The company plans to spend more than $30 billion for its part this quarter alone to build out data centers for its AI services. Now, all eyes on Apple and Amazon after the close of trading. Plus, the Federal Reserve standing pat on rates. Chair Jerome Powell sounding a hawkish tone on the prospects for a rate cut come September. Despite two Fed board members dissenting in favor of a move on Wednesday, Powell's main message in his press briefing was that there was insufficient information about the inflationary impact of President Trump's tariff hikes. And investors will be watching for trade updates ahead of the president's August 1st deadline tomorrow. Treasury Secretary Scott Bessent telling CNBC today he is going to meet with the president and the U.S. trade rep to discuss the China deal currently in limbo. The news comes after the U.S. struck a trade deal last night with South Korea, setting a tariff rate there at 15%. Let's get a check in on stock futures. Now, we are seeing strength today. This is really unusual compared to what we've seen in recent days, right? Most of the time when we have been having these record closes, it's been sort of little bit by little bit, day by day. But because of the strength of those Meta and Microsoft earnings, we are seeing NASDAQ futures soaring this morning, indicating a rise of over 1% at the open. We're also seeing the S&P 500, which is also heavily weighted toward those names, benefiting here, indicating a gain of 0.9%. And the Dow, of course, to a lesser degree. It's showing a gain of about 0.2% at the open. Let's now dig into our top stories of the day. The expectations for big tech were high, and Microsoft and Meta beat them. Microsoft now closing in on that $4 trillion market cap ahead of results from Amazon and Apple after the bell, and the Federal Reserve holding interest rates steady despite pressure from President Trump and two dissenting governors. Plus, what the Fed's preferred inflation gauge signals about the possibility of future cuts. Joining me now, senior reporters Josh Schaefer and Brooke DePalma, and our Fed correspondent Jennifer Schonberger. Josh, let's start with you on these blowout numbers for Microsoft and Meta that really, I think, we knew expectations were high going to these reports. We've been talking about them. Could they possibly beat expectations that were so elevated? And yep, they did.
Julie, they didn't just beat him, they crushed him, right? I think that's the realistic way to lay this out. You're looking at Microsoft stock up over 8% in pre-market, going to hit a $4 trillion market cap, like you said. Meta stock up about 11% pre-market. These are large cap stocks that were already trading at or near record highs, and the rally is continuing. And it's because when you look at the numbers, the story had been, okay, they're going to continue to grow earnings, but earnings growth will start decelerating. Well, look at the numbers. Microsoft grew earnings by 23% in the prior quarter, year over year. That's the first time Microsoft has grown earnings by over 20% going back 5 quarters. Meta grew earnings by 38%. That's an acceleration from its year-over-year earnings growth that you saw last quarter at about 36%. And then you look at the key metrics that these companies often trade off of. Look at Microsoft Azure growth. Microsoft Azure growth surprised by 4%. Brent Villa, analyst over at Jefferies, was pointing out that Microsoft Azure growth has not surprised by that much in several years. I mean, look at this chart. There used to be a lot of surprises when it came to Azure growth, and it was always surprising to the upside. That story had not necessarily been the case over the last couple quarters. It wasn't a massive beater. Well, it was last night, and of course, the key driver being AI. So just when you think about the themes that have been driving these stocks, the big tech companies came out and explained that those are going to continue to keep growing. I'll close out with CapEx here. Also, Thiel at Jefferies looking at Meta CapEx. They had estimated that Meta CapEx would grow by 8% in 2026. Now those estimates after last night's numbers are up to 44%. So not only are they investing in AI, but they're showing up in the earnings. So really the rallies, I think, start to make sense in these stocks.
Well, and it's so fascinating there, right? Because if Meta had said this a year ago or 2 years ago, this would not be happening with the stock, right? You know, for a while there, Meta was getting punished for its spending because people were not seeing the payoff that they wanted to see from things like the metaverse, right? So now this has really been a sea change in how the street thinks about this story. And Brooks, certainly investors and analysts are taking notice here. It does feel like, looking through the lens of these numbers, that we're at a little bit of a tipping point in terms of the AI story.
Absolutely, Julie. One note from KeyBank this morning actually pointed out that compared to Meta's metaverse vision that they had, this AI revolution is a lot more clear. We saw Meta's investment in AI and their significant spend in what the CEO there, Mark Zuckerberg, is calling this super intelligence, really play out when it comes to engagement and advertisements over this past quarter. And that's giving Wall Street and analysts really this keyway, this insight into how exactly this could eventually work out for the social media platform. And that's where we're seeing this rally this morning come from, this optimism around what could be and what continues to be this AI revolution. We had a note out from Bull Dan Ives on the street there saying that investors are not even fully appreciating the tidal wave of growth on the horizon there from the $2 trillion of spending over the next 3 years coming from the enterprise and government spending around AI technology and use cases. And so it's interesting to see here how this is a different story for Meta, a different story for Microsoft, really this turning point that we're seeing here. And it's worth noting that tech now makes up almost 1/3 of the S&P 500, really contributing to this rally here. And that is the highest proportion since 2008. And so after this momentum that we're hearing from the company is about what exactly this AI roadmap is, there's certainly lots of optimism moving into futures today.
Yeah, Josh, talk to us a little bit more about concentration here, because that, you know, there's a lot of hand wringing, but when it works, it works.
It's worked for over 2 years now at this point, right, Julie? But it certainly worked off the bottom, to your point, right? So if you just look at a 3-month chart of Roundhill's Magnificent 7 Index versus the S&P 500, that Mag 7 Index has once again been outperforming significantly. I think the Mag 7 Index since about mid-April is up over 20%. There you go. It's up 24% compared to 14% for the regular S&P 500. So that shows you large cap tech really leading there. Then you flip over to something like the equal weight S&P 500 versus the regular S&P 500. Should note the equal weight also recently hit an all-time high, right? We were just talking about that last week. There's been other stocks participating in the rally, but the white line there, the market cap weight continuing to outperform, shows you what's really leading the rally. And it's been tech, it's been AI. We use that term Mag 7 a lot, but you have to throw names like Broadcom in there. And really the broadening of this AI trade, I think you're starting to see that being talked about this morning too. I saw Citi making a move on CoreWeave this morning due to all of this AI investment. Those analysts now feel better about that stock after the rally that it's seen. So it's the broadening of this AI trade, and that's sort of leading the market higher. And it also is having an impact on the economy too, right? You and I, Julie, were talking about a note out from Neil Dutta over at Renmac this morning. He was taking a look at GDP contributions, and you could argue, looking at certain metrics inside the GDP release, that actually he's looking at here investment in processing equipment plus software, that's your white line, that has been a larger contributor to GDP than consumer spending. So what these companies are spending, again, spreads through the economy and then perhaps builds out a broadening of that trade into other sectors that benefit from big tech investing in this technology. And that's the market story that has really been shaping this bull market and feels like it is going to keep carrying it at least this morning and perhaps through the next couple of weeks as we sort of break through these earnings.
Yeah, I mean, that is a mind-blowing idea that CapEx cycle is a larger part of GDP now than consumer spending. We'll see if it stays that way. Lest we forget, guys, in all of the tech excitement, we had some pretty significant economic data this morning on the back of the Fed meeting yesterday. Jen, I want to come to you on that. Inflation accelerating a little bit in June.
Yeah, inflation not moving in the right direction here for the Fed, Julie, clocking in at 2.8%. When we look at that core number, which excludes volatile food and energy prices, and this is the personal consumption expenditures index. This is the most favored inflation gauge for the Federal Reserve. Again, that clocking in at 2.8% on that year-over-year number versus expectations for 2.7%. And what Chair Powell had also expected. He said yesterday he expects it to clock in at 2.7. So this came in above what the Fed expected, and digging into those numbers a bit to see if it's being driven by the good side, which would imply perhaps a pass-through on tariffs versus services. We are seeing the good side of the inflation equation in this report perk up a bit from the previous month. Again, this was for June, so the end of the second quarter, and if we looked at PCE from overall GDP, it was 2.5%. This report just 1 month of that 3-month block. So there could be some irregularities in the data or some ups and downs, if you will. Nevertheless, just not looking good for the Fed here. And it goes to Fed Chair Powell's point that it's still early right now for the Fed to determine what the impact of President Trump's tariffs are on inflation. That he wants to see more data as we go through the summer months. Again, this is just June right here, but certainly not moving in the right direction for rate cuts.
And so, Jen, how should we be thinking about, after what we heard from the Fed chair yesterday, how should we be thinking about what to pay the most attention to going into September? Or is the idea that even in September, we are not going to be seeing the full effect of tariffs?
Well, that is a $64 million question, right, Julie? And so many reporters did try to press the Fed chair on that yesterday. And he did not open the door to a rate cut for September, saying that we need to look at the data, and we're going to get a couple more inflation reports, couple more employment reports. Right now, it seems like the Fed is looking at both sides of the equation. They do think that the labor market remains solid right now. Fed Governor Waller, who did dissent because he is worried about private sector job growth stalling, that is not something that Chair Powell seemed to mention he's worried about at this point. So he seems to be looking more towards the inflation side of the equation. This certainly doesn't help the case for September. We'll see how the rest of the numbers come in. I did think it was interesting that he said during the press conference yesterday, look, you could say that we're actually looking through the goods inflation right now because we're not hiking. It was a bit of a shot across the bow, perhaps, to the president, who is out again hammering the Fed for not lowering rates yesterday.
Yeah, you can pretty much set your watch by that at this point, Jen. Thank you so much, Jen, Brooke, Josh. Appreciate it. Shares of CVS rising in pre-market trading after beating Wall Street's expectations on the top and bottom lines for its second quarter. It also raised its full-year outlook. Yahoo Finance senior health reporter Anjali Kamani is here with the details. So what drove that beat?
Yeah, well, we're looking at the cost pressures that, of course, CVS and other health insurers have been facing. And if you recall, CVS was kind of the bellwether for this trend. And if you see the results today, it looks like that trend could be coming to an end, or at least slowing for some time. You see on your screen the results for this quarter, a beat. There you have it, expecting about 94 billion and beating at 98. And then the earnings per share also just slightly up. Now, this is also interesting because we did talk to CEO David Joyner, and he had mentioned that, the company is looking at a slower than expected growth to recover from those cost pressures coming largely from increased utilization in the Medicare Advantage business. He did tell me that, he thinks that it's okay to be boring, if you will, because the company knows that it has to pull itself out of this in order to return to growth. There you have it. I think I've been pretty consistent in some respects. I don't even mind being boring, he told me, because I'm going to actually deliver on the promises that I've made. Big promise to complete that promise, and we'll have to see if they can actually pull back out and continue growing. They've also made some significant investments in technology, about $20 billion for the next long-term period, and they also signed on to the Centers for Medicare and Medicaid Services as part of one of the larger companies to invest in interoperability, which has been essentially a goal in the industry for some time. Now, whether or not all of that actually comes to fruition, we saw it start back in the Obama administration, and now with all the parties coming together. I did talk to him about that, and basically about what it means to be, growing out this company at a time where there's so much cost pressure and so much pressure on the retail side. We've seen the softness. Even that has been looking at a little bit of growth because of the Rite Aid data that they were able to acquire and the patients they were able to acquire from there. So a good quarter, and whether or not this holds, we will have to see. He did also tell me that this is going to be one of those things the company has to continue focusing on, whether or not they can deliver quarter over quarter.
Well, investors certainly voting with what they're doing, hitting the buy button this morning. The share's up 6%. Thanks, Anj. Coming up, we're going to catch down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's trending tickers. We're watching Applied Digital, Carvana, and Roblox. First up, Applied Digital soaring today on earnings. That company reported revenue for the fourth quarter that beat the average analyst estimate. The digital infrastructure company also announcing a deal with CoreWeave, where the cloud infrastructure provider will lease an additional 150 megawatts of capacity. Applied Digital shares up 24%. Next, Carvana jumping after the online car retailer reported a six-fold increase in net income and record quarterly sales of used vehicles. Carvana's earnings per share and revenue topping analyst estimates. Remember, famed short seller Jim Chanos publicly shorted the stock earlier this year, saying its profits are primarily driven by the sale of loans it originates, not from selling cars, and that it is overvalued after a long run-up in the shares. But the stock has risen more than 160% over the past 12 months. And finally, we got Roblox surging this morning after reporting second quarter results that beat expectations. The video game company topping estimates on key metrics like bookings and daily active users. It also raised its full year forecast for bookings and revenue, and those shares up 18%. You can scan the QR code below as always to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, tech stocks powering the broader markets, Meta and Microsoft surging after blowout results. Joining me now, Kenny Polcari, Slatestone Wealth Chief Market Strategist. Obviously, it's good to see you, Kenny.
It's good to see you. Thanks. Thank you.
Obviously, big tech has been a big part of the rally that we've seen for a while now.
Yeah.
Is that just going to continue to be the case?
I think it is going to continue to be the case. Look, in my mind, we are at the very beginning of this massive tech revolution that's been going on, but I still think it's very much in the infancy stages. And now if you start to talk about quantum computing, that's just going to add a whole new level of interest in the tech space in the market. So yes, I think you got to stick with it. I think it's going to continue to go higher. Look what happened to Microsoft and Meta yesterday. They crushed it, right? And tonight it's going to be Apple, it's going to be Amazon, we got Nvidia coming up, we got Palantir, right? So these companies are just absolutely crushing it. And so I think you have to be in it. So you have to have,
At the same time, I know that the market, valuations of the market by some metrics are getting stretched, right? I know you look at the sort of overbought, oversold indicators, momentum indicators. Right. And by that metric, the NASDAQ is getting up there.
The NASDAQ is up there. The NASDAQ is just north of the 70 line, which signals overbought, right? The S&P was at 76 and change yesterday morning, and then we had that little bit of a pullback, so it's also sitting right on the 70 line. So I think you just have to be aware that stocks are ahead of themselves. And I'm not saying that, we're going to have this massive pullback, not at all, but I think you have to be aware that potentially you're going to get one headline. And yesterday we got that one negative headline. Look at how quick the VIX spiked 11% in all of about 15 minutes after Jay Powell started talking, and stocks sold off, right? Now, they didn't sell off much. It wasn't much of a pullback, but I think you have to just be concerned that a pullback is coming. And actually, you'd want to see a pullback coming because we've done nothing that goes straight up with no breath.
Right. As always, of course, it matters what your time horizon is, right?
Correct.
If you're just buying and holding these stocks for the long term.
Yeah, but even if you're buying and holding for the long term, I'm a long term, right? My portfolio is long term. It's not a trading portfolio. And while I still want to invest money, at the moment, the money that I'm going to invest is still sitting in a government money market fund because I'm waiting for that pullback. Listen, I own these tech names, so if they go up, I'm great. I'm not chasing them.
Right.
I'm looking for the opportunities and names that are lagging, that have quality stories and fundamental stories.
And also to your point, kind of the broader market is maybe at a little bit of a vulnerable or delicate state for those negative headlines, potentially. The other thing I want to ask you, though, was yesterday's headline really that negative?
No, and I laughed. I put it in my note this morning.
Yeah.
First of all, no one should have been surprised that there was no rate cut, and no one should really have been surprised that Jay Powell was not going to commit to a September rate cut. He never is committed to any rate cut. He left the door wide open. He said, look, I'm just not committing. Doesn't mean it's not going to happen. If the data changes between now and September, it will happen. If the data doesn't change, it's not going to happen. And Robert Ferguson, who's a former Fed member, came out this morning and he said, look, as far as he's concerned, based on the data today, he does not see a September rate cut. And actually, the market is 60-40 in favor of no rate cut in September. Now, that's today. That could change over the next month and a half. But right now, the market's kind of in that funny place. And so, no, I don't think it was much of a headline, which is why I think we saw the market bounce back.
So what's interesting also is, we're always weighing like what's of the relative importance to markets. Couldn't you argue that tech earnings right now are just more important anyway?
100%. The tech earnings are much more important to what's driving the market and kind of what's driving the tone. I mean, look at these. These stocks are up. Microsoft and Meta are up 8 and 11%
for stocks
this
for
morning.
companies of that size to be up like
11
that. For
Meta to be up 11% in the pre-market. It was up last night after the bell, certainly, when they announced. But it's still up 11%. That's a massive move for these stocks. And that just goes to show you two things, that people are excited about it. It also goes to show you, I think that there's a lot of money that got out, that is yet to go back in. A lot of guys that were betting, on the short side, thinking that we're going to get this correction. And then when you don't, the short sellers become buyers because they're getting crushed, and that only adds to that momentum, which is why I say be careful of the RSI line, because that tells you when the momentum's getting ahead of itself.
And then just quickly, where does tariffs factor into the hierarchy of needs of the market?
It's almost as if tariffs now have taken a back seat. It's off to left of the left stage, right? It's no longer front and center. And look, we are making progress, right? We've got an EU deal. They announced last night a deal with Singapore. We got the China-U.S. trade talks going on. Those are major. We got the Japanese, right? Yeah. Those are major trading partners, and so it seems to be settling in. The tariffs are not 50% the way that everyone started screaming about.
Copper.
No, well, okay, right.
And Brazil.
Well, because they want to bring them in line, right? But they're settling in at what, 10 to 15%, which I think is really where the market assumes they're going to be. And that's not going to be a game changer. It's not going to be a crusher. It's not going to crush the markets.
Right. It doesn't seem that way.
No, it doesn't.
Good to see you.
It's good to see you. Thank you for having me. I'm sorry, I fell out of my ear.
That's okay. I'm right here, so I'm the only person you need to hear anyway. It's all good. And you can catch more of Kenny on the Yahoo Finance podcast, Trader Talk, on Wednesdays. It's available anywhere you get your podcasts. Coming up on Yahoo Finance, opening bid, our own executive editor, Brian Sozzi. Brian, I know that you are pumped today.
Julie, I was pumped before today because of all these tech earnings, but just listening to Kenny and you, I'm really fired up. Love Kenny, love his podcast. But we're going to absolutely tear apart that Microsoft earnings call, the Meta earnings call. I'm going to look at CoreWeave 2, which is ripping higher here in the pre-market off of those Microsoft results and a City upgrade. And then for our Power Players segment, I know you're a big fan of all things restaurant stocks, Julie. Wingstop CEO is going to fly down here, join our set, or digital set, I should say, talk about why his stock went up 27% on the company's earnings yesterday.
I'm envisioning some kind of Photoshop of him with chicken wings.
I'm not doing that. I don't want to go there. He's still a CEO, professional. I want to keep it professional. Julie.
Understood. That does it for Morning Brief. Thanks, Saz. Much more ahead on Yahoo Finance. Brian Sozzi coming up next.